Hi everyone. Today I want to talk about stocks I'm trading. Every Wednesday I go over news articles that are directly related to stock or option positions that I currently have. The first article is the fact that Uber and Lyft may have to stop classifying their drivers as contractors in the state of California. And as you can see here, I currently own 100 shares of Uber and I have sold a covered call option. Next up, let's take a look at CrowdStrike and why they climbed 12.9% in July. Looking at CrowdStrike, I recently sold the 90 puts and bought the 75 puts for a short put credit spread. Last up, let's take a look at Simon Properties and the fact that they are looking to salvage some of their distressed retailers. For Simon Property, I have also sold a put credit spread. You can see I've sold the 60 puts and I bought the 45 puts, resulting in a $1.45 credit. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying the Pershing 9X yacht, or if you want to be part of a well-educated financial community, definitely like and subscribe. It has a large open sitting area with a dining table. It has a modern master suite with a very nice master bathroom. It even has a place for the peasants to sleep. And of course, a fully functional kitchen. This particular one is on sale for $10 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up, a judge grants a preliminary injunction requiring Uber and Lyft to stop classifying their drivers as contractors. This injunction gave them 10 days until it would take effect, and if upheld, both Uber and Lyft, which are not yet profitable and are currently both suffering during the Rona, would have to classify their workers as employees versus the independent workers, which they currently are. If they have to classify them as employees, then they will have to do things like pay them a minimum wage versus just paying them for the trips that they execute. The current Uber and Lyft models do not forecast this and would likely lead to them not operating the way that they are in California. They say that Uber and Lyft are currently violating Assembly Bill B, stating that gig workers must be classified as full-time employees, ensuring that they receive benefits from their employers. Uber and Lyft obviously opposed the bill, arguing that their workers enjoy the flexibility of creating their own schedules as contractors. If upheld, the misclassification could cost both companies hundreds of millions of dollars, and as a result of this, Uber and Lyft both went down 1.3% and 2.1% respectively. Uber responded saying that the majority of their workers want to remain independent, and they've made significant changes to ensure that they can under California law. They also said with more than 3 million Californians without a job, perhaps their elected leaders should be more focused on creating work and not trying to shut down entire industries during an economic depression. And then he individually handed ice packs to each of their leaders because that was a pretty sick burn. Lyft also responded saying basically the same thing. However, the courts still feel like they are miscategorizing their workers, and they supposedly want to provide the best workplace protections, whether or not it's best for the industry. Of course, this ruling is not the end for both of these companies, and they will continue to appeal. The CEO of Uber suggested that there might be a third way to classify workers that give them some protections without sacrificing the flexibility of their contract work. The result of all of this is still yet to be seen, and it really didn't have a huge impact on the stock for now. Looking at the chart for Uber, it's been fairly flat since before the start of 2020. It had a little bit of run up along with the rest of the stocks, peaking around February 19th, and then it had its low on March 18th, and since then it's really been trading in this $29 to $33 range. My current cost basis is $31.08, so I currently am in a profitable position. The markets are currently open, so Uber stock right now is at $31.65. And you can see my current position is $33. However, I did sell a put to get into that position, so I received $71 in credit. And then I also sold a covered call for $121. So overall, I have received $192 in credit, bringing me down to that $31.08 of cost basis. Moving on to CrowdStrike, why did they climb 12.9% in July? As you can see, they have outperformed the S&P 500 by quite a bit in recent months. They say CrowdStrike has benefited from the economic recovery and the strong demand for endpoint security services that CrowdStrike provides, which has caused the shares to more than double in 2020. This has caused many analysts to improve their rating from sell to neutral, and Citibank gave it a one-year price target of $116. Jefferies analyst Brent Hill also published the stock as a hold, giving it a price target from $100 to $115 per share. In early August trading, the company saw a 10% retracement, losing some of its solid rally, despite the broader market improving. While the exact reason for this may be unclear, especially with the growing demand in cloud software and cybersecurity needs. And you can see that large recent decline depicted here. It was on par with the S&P 500 until about August 5th, and then between August 5th and August 7th, it declined over 10%. CrowdStrike is set to release earnings on September 2nd, and the current guidance is between $185.8 million and $903 million. They're expected to post a 5-cent to 8-cent loss on the year, giving them a market capitalization of $22 billion and approximately 28.5 times year's expected sales. As you can see here, it was trading around $60 in February, and then it dropped all the way down to the mid-30s and has rallied up to $116 per share. It had a little correction recently and dropped below that 50 moving average, touching about $95 at one point, and it has since bounced back up to $98 per share. They are currently up pre-market to $98.87. And you can see here my option position is the 90 puts, and I bought these 75 puts as protection, meaning that I've put up $1,500 in collateral, and my intent is to roll this position until it becomes profitable. Lastly, Simon Properties is looking to buy up distressed retailers. The chief executive of Simon Properties said that they are looking to buy retailers like Lucky Brands, Brooks Brothers, and maybe even JCPenney. They're looking to acquire inventory at below cost, saying that there is plenty of profit in there. They continue to look for opportunities and that they are doing their fair share to keep the world as normal as they can. The CEO noted that saving Brooks Brothers from total liquidation would save 4,000 jobs alone. And he also wanted to make it clear that they're not buying these companies in order for the retailers to pay them rent. Simon Properties was up more than 5% on the day and then fell a little bit over 1% in after-hours trading. This is due to the fact that they were in talks with Amazon to use some of their empty mall space as open warehouses for Amazon. They say more than 40 retailers have filed for bankruptcy, and the CEO likened the situation to the early 90s. However, even though they've seen something like this in the past, they are expecting a durational impact, saying that this is not your grandmother's recession. We are dealing with a lot more bankruptcies. Their profits fell to $254 million or 83 cents a share from around $500 million, representing a 24% decline for the year. This is slightly below expectations at around $1.14 billion for the year. They say they have collected around 73% of their rents in July, with about 91% of their tenants open for business as the lockdowns have been reduced. In June, Simon Property had to sue Gap for $65.9 million in rent and other charges, stating that they have retailers that they need to deal with and certain tenants that haven't paid rent, despite their contractual obligations to do so. Despite all this, they do feel encouraged with the shopper response to the reopening. Taking a look at Simon Property Group, they were downtrending into the Rona, and then once the Rona hit, obviously they fell off a cliff. They hit a bottom of around $48 a share in March, and then retapped those bottoms in May, at which point they rallied up to almost $100 per share, reducing back down to the $68.17 that they are right now. Looking at my position, you can see here I have sold these 65 puts that expire on August 21st, and I purchased the 150 puts, again for August 21st, so I have $1,500 collateral, and I received $134 credit. Let me know down in the comments section what you think of Uber, CrowdStrike, and Simon Properties. Are you bullish on any of these companies, or are you neutral? Definitely like and subscribe if you got any value out of this video. Of course, this is all for entertainment purposes. This is not financial advice. And with that, let's get to the jelly. So today's jelly is the latest test flight of this dude who basically has jet engines on his arms. So here's what that looks like. So basically, this video tells me that we have completed our first steps to becoming Iron Man, and that's pretty sweet. Let me know down in the comments section what you thought of it. Definitely like and subscribe before you go, and have a great day.